the equity markets are up, gold is ripping. Everything is ripping except for Bitcoin and Ethereum and Solana and crypto. And to me, that suggests a little bit of weakness, or it suggests like actually not a little bit, like a good amount of weakness in the market. I think up until this morning, I was a little bit more bullish. But when you see a divergence like this, when you see, SPY up 0.5%, NASDAQ up almost 1%, and Bitcoin down or like not moving, you have to start thinking, okay, well, does this mean we've run out of buyers?
This episode is brought to you by Kraken Custody. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
And we're live.
Welcome back to another 1000X podcast. It has been a reasonably uneventful week. A little bit of chopping here and there for Bitcoin. Both bulls and bears got excited, I think, over the last few days since we last recorded. But overall, basically things are at the same price. The one notable exception in terms of movement was Solana, which had that great rally up from 200 to 250, now back down to 231. I don't know, Jonah. What are you thinking? What excites you in the markets right now?
You know, it's funny. You said uneventful week, and I guess if you just look at the price action between the last time we recorded and today, I kind of agree with you. It's funny though. I got my start in content creation long before this podcast. I would put out internal notes to people at Goldman, people at VTOL, and then at DRW, I started tweeting it, which is kind of how we ideated on this podcast together. Like basically you did the same thing. You started newsletters. Nobody wants to read a newsletter that begins with, hey, nothing happened, right? Oh, it's just boring market, sideways, ZZZZ was how, a lot of people at Goldman would put out notes like, oh, snoozer again. And you just wouldn't read the rest of the note, right? So I challenged myself in my career to say, look, I'm a professional trader. I'm sitting here all day. I have to be able to find at least something that matters in order to produce content that gets me interesting conversations and trade ideas and whatever. And I found just by setting myself that challenge that markets are always interesting. Even if the benchmark isn't doing something that'll get you rich or make you poor, there's always like, you just have to dig a layer or two deeper and there's always something awesome going on. So I think, that's what I tried to do. I guess we could start with my, the entire internet clowned on me for putting out a pair trade idea that I was thinking through myself. As I was digging through the layers of the onion, I was like, hey, why don't we look at long AERO, short ENA? Now, I'm a little bit of a boomer in this market and I'm not very good at social media. So I definitely put myself out there in a way that set me up to get eviscerated by the online trolls. I got dragged through the mud in a way that hasn't happened since I put out that Solana bear tweet at $30 or $20. Needless to say, I didn't actually, I'm long Aerodrome. I was thinking about shorting ENA against it. And then a day later, I was like, you know what? Based on what I've learned from this tweet, I'm not going to do it. Just best expression, long AERO. Needless to say, that's the kind of thing that I like to look at when the benchmark isn't moving. And maybe we should talk through that trade a little bit because ENA ripped right after I put out a couple days after I put out the tweet, but so is Aerodrome.
What's interesting is like it ripped. It's kind of interesting. It ripped specifically because you got unlucky. It ripped specifically because of a DAT. It's like it ripped because it raised money. And one thing that I found really interesting is a lot of people got very angry with you over the idea of shorting something. And that to me tells me it's over-owned. Like if you have, I mean, think about this. Like if you have like, and a lot of the people, like no shade to them. A lot of the people are like the VC crew. It's a lot of people that I think probably were in ENA, have been in ENA for a long time, or trying to maybe involved at the ENA DAT or knew that it was coming or something like that. I don't know. It's very funny to me to watch how angry people got. I mean, to be completely honest, I didn't love the comparison. Like I thought, like my take on your thesis was I didn't love the comparison between the two. Like the idea of putting up Aerodrome and shorting ENA to me felt like two completely separate trades because they're not really in the same bucket. And so it's like, do you like longing Aero? Yes. Do you like shorting ENA? Like, you know, it's like, maybe. And so I want to, but I do want to talk about the way that you put this trade together, right? So when you talk about, okay, let's starting with Aerodrome. Like, why did you like Aerodrome? Fits the venture bet framework, 1 billion effective valuation with potential for multiples of that. Clear big vision, huge total addressable market, token economics aligned, buybacks volume ratio, and a model Wall Street can plug into. A lot of those things, like seem to also align with Athena. But the thing that just stood out the most to me is when you were talking about just the valuation difference, right? Like the valuation difference was just massive. And that's what I think it boils down to at the end. Like if you go to ENA and you look at this thing, just pull it up. What's the fully diluted valuation is 11 billion. 11 billion. Like that is freaking insane. For this type of product. That we have seen multiple times this exact type of product implode in on itself. It's been tried a multiple amount of times. This one caught on, right? This time it really caught on. But I do think that that's a pretty absurd valuation given what I think it's gonna, like what it's up against, right? Nobody really cares about the whole decentralization aspect of stablecoins anymore. There are like hundreds of different chains that are trying to launch to capture the stablecoin market at this period in time. And ENA, I think, introduces, you know, it's an interesting product. It's growing. People are putting money into it, but 11 billion is just like an obscene valuation for this thing.
Guess what their revenue is? I'm on DeFi
that.
Llama. Annualized revenue of Athena.
Tell me, Gianna, what is it? What are we looking at?
$28 million on an 11 billion FTV. And AERO, their FTV is like 2 billion ish, but because so many tokens are locked forever, I actually think the market cap for Aerodrome is probably a better metric than FTV. But Aerodrome's annualized revenue is $178 million. So you're looking at a big multiple of Athena's revenue and a fraction of the supply, or sorry, a fraction of the market cap, FTV, whatever you want to call it.
Well, I have to look into that more because mostly with DEXs, when revenue is quoted, it's not actually collected by the DEX, right? It's
That's fair. And if you look at USDE, just what it's collecting from, you know, yield, it's huge. So I need to do a little more deep research on the tokenomics. But basically, they are both DeFi products. And my macro thesis is that if you're investing in sort of like pre-mass appeal DeFi products, what does mass appeal look like? And I totally get that, you know, a restaking engine is different from a DEX on base. So you have a very solid point there. They're not like, it's not an apples to apples comparison, but they're still both pieces of fruit, right? We're not comparing apples to tractors here. So basically, I think the valuation difference, like you said, is important to focus on. And as DeFi goes mainstream, what do you want to, you know, we're all just crypto VCs floating around out there, and we're able to trade these tokens, unlike, you know, actual trad VC where you can't trade the underlying equity. So what do you want to bet on? Do you want to bet on something that Wall Street can plug into? And to me, like Aerodrome is a story about, it's not just about new token creation or meme coins. It's about new market creation, right? Like prediction markets, commodities on chain. I think a lot of this stuff, you know, will be settled by an AMM DEX. And Aerodrome is, in my opinion, the best architected AMM DEX. So as new markets proliferate, I can see that project capturing more and more of the, you know, the addressable market. Whereas with Athena, I still think there's too much of a hangover from the Anchor protocol and the 2008, just global financial, which is really a credit crisis, for Wall Street to feel comfortable with a restaking engine and putting institutional capital into that. So valuation difference, addressable market, and institutional adoption, I think they all line up well for Aerodrome and poorly for ENA. So I put that out. Timing was terrible. But to my credit, I didn't short ENA. When I put on a trade, I tweet, I just bought this, or I just sold that, or I just did this pairs trade. Here, I was just like, here's a trade idea. What do you think? Oh, interesting feedback. Maybe since we're in a bull market, it doesn't make sense to short something, even if I don't like it. So just be long Aerodrome. That was the takeaway. Mm-hmm. Then the internet called me a LARP and a loser and all this stuff, which is fine. But that's what we do on the 1000X podcast. We come up with ideas in public and put them out there and share what we're doing. So our necks are out there and exposed to, like flack from the internet. But I still think it's better to discuss these things rather than, just like pretend we're always right and only talk about the victories. Here I was, the timing was poor on ENA for sure. I own that. However, to your point, the AERO ENA pair is indeed up since I put out the tweet, and who knows, maybe it'll keep going up. I'm not going to short ENA though.
It's not up trivially. It's up like 20%.
Yeah.
That ratio
would have worked.
There was a dip right after, which makes me think that this is like the hate was like astroturfed by ENA shills, because you put out that tweet and then 2 days later they announce a massive DAT. That's a sizable portion of their float, and it's like the entirety of crypto Twitter is on this trade. Like they were all riding it because I assume there was some level of information that was leaked before this and it went up. And so I think a lot of people, it's like even felt astroturf, because I don't think your points were particularly off. Like on a long-term time horizon, I think all of your points hold true. In fact, Aerodrome has like amazing tailwinds behind it, specifically because of this new base integration on Coinbase, which is dope. Shout out, you can actually see our 1000X coin on Coinbase now, which is kind of fun. It's like everything got pseudo listed on there, which is interesting, and super bullish. I think just for the general market, I think that's really good. But yeah, people, look, the internet loves to get mad. The internet loves to come after their victim of the week. They love to call people LARPs and call people this and call people that. Very. The reality is, there's like, if you go look at Twitter, very few people are fully doxxed and sharing their trades.
Yeah.
Like most of the people that are sharing their trades hide behind avatars. Like, I mean, you can verify everything that we've done in our careers.
Yeah.
And we're happy to be here. I will say sometimes it gets to me. It's like it's a bit annoying that the people decide to start shit, but the best you can do is just laugh.
I just block a lot.
The reality is it's good to have these conversations out and open. It's good to get torn apart or celebrated or whatever it is, because that's the only way that you learn, especially if you get torn apart on things. I mean, I think it would have been like the amount of hatred that came out for the ENA and all these people writing theses probably stopped you from putting on that short. So at least
yeah. Although to be fair, most of the hate came out after the DAT got announced and ENA popped. Before that happened, these trolls are pretty cowardly, even though they're anons. Like 90% of the vitriol came after I was like proven wrong for a few percent on a trade I didn't even put on and publicly didn't put on because of what I learned from putting out the idea. So I think people are very quick to celebrate like small victories on a short time frame. I think it's, we all need to, you don't make money like hopping in and out of trades and like this in your entire portfolio, right? Maybe you can make a little bit of money day trading some of your portfolio, but realistically, the timeframes that we talk about when we discuss these trades are, weeks or months, or with Bitcoin, years. So, if you're gonna call me horrible names and tell me that I'm the stupidest person in the world because something goes 10% in my face after I talk about it, I'm just gonna block you. And if not, like, let's have a meaningful conversation. I think that there's part of the reason why this podcast gets listeners is because we have those trading floor conversations that most people can't access. We're trying to create that trading floor for crypto. And I really value intelligent criticism, like what you just laid down on the table there. Like, I want to debate ideas. I don't want to debate my IQ level with some anon. So yeah, let's keep discussing trades out in the open. And even when the benchmark isn't doing something interesting, as we saw from this AERO ENA debate, there's always a little truffle if you dig below the surface. I mean, there's tons of stuff like this. Crypto's getting interesting. Like beneath the benchmark layer, there's a lot going on. My question to you, Avi, though, is like, if the DAT is what moved ENA, the DAT is what moved Solana. When Aerodrome DAT, when are we going to get? Is it just a DAT market, or are there other catalysts that could move, like cause us to be interested in ecosystems here, or is it just about these DATs?
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution. And deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Kicking off for its season 2 in September, Peaq's Get Real is Web3's first campaign rewarding people with tokens for creating real-world value. With a total prize pool of 5% of Peaq tokens' initial supply, Get Real follows a simple formula. Connect your devices, create value, score points. The quests can include such things as driving around with a Web3 navigator app, measuring local noise pollution, or running an AI agent in your browser. Further down the road, you can get a unique, customizable NFT designed by the agency behind the recent Call of Duty rebranding. An NFT that will evolve as you make real-world impact. Follow Peaq on X to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I do think the DATs, what's really nice is that they've sort of faded into the background, which is great. They still obviously exist, and they're pumping out capital. But I think with this, even like look at this most recent move with Solana, they're getting front run pretty aggressively because there's a lot of leakage in this market. So, for example, the Solana DAT there's a huge amount of debate, including on this podcast, what's happening with this DAT. And so in the beginning, when I went on Thread Guys podcast and I said all these Solana DATs are buying locked tokens, that was true at the time for everything besides the Galaxy DAT. And I actually mentioned that on the Thread Guys stream. If you look at the full clip, I said, I don't know about the Galaxy DAT. I don't know what it's doing. And then on Twitter, I clarified later, hey, it looks like there's a reasonable amount of cash. And then I came back on the podcast and talked about the cash and talked about how Sol is probably a good long to 250, 260. And guess what? Sol went from 194 when I mentioned that exactly to 250 and is now back down 10% at 232. I'm out of that trade. I got out a little early. I got out at 226 because I took the 15% move. I was like, all right, that's enough. Time to get out. And that's like what these that's like what these DATs are being used for right now. They're being used to you just front run the flows, because I do think that there's a little bit of decaying demand from TradFi just across the board, and you're seeing it in inflows into the Ethereum DATs. You're seeing it in the inflows into the Bitcoin DATs. This is a little bit of waning interest and a tremendous amount of front running. The game has become known, which makes it a lot less interesting to play. There are a lot of tools for tracking DATs now. There's a lot of leakage, and so I think DATs are going to fade a little bit. People are going to realize, okay, this is going to slow down. Like the trickle of money into these things are going to slow down. And so I think what you're going to see is you're going to see some level of reversion. Like right now, I'm a lot more interested in the stock market and the things that are popping off organically in the stock market than I am in crypto. I think gold continues to outperform. I think uranium outperforms a ton. I think commodities outperform crypto. Probably for the
When you
next
say
little
commodities outperform crypto, which commodities?
bit, specifically copper and uranium
Okay.
miners.
Most
Specifically
commodities,
copper.
I think, will drastically underperform crypto.
I'm talking about over the next 2 to 3 months.
Okay. Galaxy stock on a tear. So I mean, there's some equities there, some crypto adjacent equities to trade.
Galaxy stock's on a tear. Tesla's on an absolute tear. Elon's buying stock for the first time since 2020, which is nice. I think that we're probably in for a snooze, would be my guess, for the next 2 to 3 months, maybe a little bit of reversion. I mean, if the DATs aren't taking this higher, you have to ask yourself, well, where's the new, like, where's the money going to come from? Like who's going to be allocating in to crypto right now? And the answer is, I don't think anyone. I think people are going to wait. I think in terms of momentum, the whole momentum and value framework, we've gone sideways for enough time. I thought that we were going to get a little bit more of an oomph. We were going to get a lot more excitement back into the market, but it looks like excitement has died for the time being. Especially like on this latest, like today is really when I started forming this thesis in my mind, specifically because the equity markets are up, gold is ripping, everything is ripping except for Bitcoin and Ethereum and Solana and crypto. And to me, that suggests a little bit of weakness, or it suggests like actually not a little bit, like a good amount of weakness in the market. I think up until this morning, I was a little bit more bullish, but when you see a divergence like this, when you see, SPY up 0.5%, NASDAQ up almost 1%, and Bitcoin down or like not moving, you have to start thinking, okay, well, does this mean we've run out of buyers? Like, does this mean that people don't really want to buy Bitcoin at 115? Like I thought up until like even this weekend, I was more bullish because we were still on that uptrend. And today is kind of it's just making me a little bit more nervous about the market and in the short term. Like, I think if you had asked me 2 days ago, hey, are we going to 150 first, or are we going to 100 first, even though that's a completely asymmetric trade, I would have said probably 150. Now I'm like, I don't know. I'm flip-flopping a bit on my bullishness because of the price action today. Maybe I shouldn't be. Maybe I'm reading into it too much. But like if you look at ETH, for example, we just printed a lower high, right? Like ETH did not get back up to that 5,000 level. We got up to 4,800 and then we sold off 5%. Like that, like the market's slowing down a bit.
It's slowing down since when? Like when was it fast to you? Since which point it's slowed down?
I mean, since August. I mean, it was, over the summer we were moving aggressively still. Now
I guess we had a nice run from the Terra flows.
We're not punching new highs. Right?
Yeah, like basically the market moved fast during the election after Trump won. That was a nice rip. Then we got a nice rip after the huge Peaq. So there was some adrenaline there. I think we're going to get another nice rip. I really do. I think it's just going to be more sideways price action, and then we're going to get a rip. But to me, crypto, and this is a positive feature for crypto, not a negative feature. Crypto is an episodic macro asset like commodities. That's how it looks to me. That's why it looks so familiar. And what does that mean? It means that sometimes it trades like the euro. Sometimes it trades like the stock market. Sometimes it just completely dances to the beat of its own drummer. And I worry about crypto when it's correlated 1-for-1 with equity markets. To me, that's bad. That means that it's like you get none of that asymmetric upside associated with the technology. You get all of the downside of macro fears. Like that's when crypto's correlated with equities, it like kind of feels like bad times. Right now, it's dancing to the beat of its own drummer, to use my sort of episodic analogy. And what that means to me is that we're we're in a bull market for risk assets more broadly. They're not always going to trade tick for tick with each other like they do during violent bear markets. And so am I going to be upset? Like I'm more of a medium to long-term kind of conviction person. In the short run, you may be right. You're worried about the short run. You said it out loud. You could be right. Maybe this is the wrong asset to hold for a while. But given my desire to be long Bitcoin for the medium to long run, I take heart in the fact that this isn't just levered equities right now. And I think that what's probably going on behind the scenes is a scenario where institutional adoption is just a slow drumbeat that's in the background. And I think that, I don't like the all-in podcasters. I think they're kind of arrogant to the point of it being a detriment to the podcast, but they do produce some pretty insightful content they just had their conference. You listen to like the Vlad Tenev interview or whatever the lady is who runs NASDAQ, I forget her name. All they're talking about is blockchain tokenization and bringing money on chain. So that's why I'm thinking about Aerodrome versus ENA. That's why I'm thinking about medium to long term. Where's the next buyer going to come from? DATs are like a sugar high, right? Like it used to be in 2021, the sugar high was just like retail people, getting crypto pilled and lifting VCs out of their bags. DATs are the version of that at today's institutional scale. But, none of these sugar highs are going to take the market higher over the long run, the medium to long run. Over the medium to long run, you kind of need institutional participation on blockchain. And that's not going to happen all at once in this like FOMO driven frenzy of capital allocation without thinking about it. It's not a white hot mania like VCs betting on AI right now, or like VCs betting on crypto in 21. It's going to be more like what happened to the NASDAQ from 2000 to 2025, where you just have this just gradual appreciation of Amazon's market cap from a few tens of millions to trillions, right? So I think that's what's going on, and it's hard to fade something that powerful in the long run. Over the short run, though, it does seem like the part of your book that you allocate for active trading, maybe you're not supposed to be taking short-term bets on crypto. Maybe you're supposed to be betting on, putting your money behind Elon Musk and buying Tesla, or putting your money behind Novogratz and buying Galaxy. I think we're in like decorrelated land right now, and that's probably a good thing,
Yeah, it's a good thing, but we're traders at the end of the day, and you're talking about Bitcoin. Let me put something to you. Say Bitcoin pulled back 15%. Where do you think Solana goes? Where do you think Ethereum goes? It's like, where do you think these other assets go?
Down more than 15%.
They come down a bit. I think that based on how the market is trading right now today, I'll look to see tomorrow. I gotta check a few more statistics, which I'll do live with you right now. But it is looking a little bit more nerve-wracking to be in altcoins. It's looking a little bit more nerve-wracking to hold any sort of leverage. If you're like actively trading, it's probably time to bring down sizes. On alts, like you could wake up and get caught, I think, on a bad down day, and I would probably want to get out of the market if you're looking at, hey, let me try to like punt some of these Solana coins. Let me try to punt some of these base coins. It's like maybe time to tamp down on that activity and concentrate any profits and winnings into BTC, because the market is slowing down. I think what really has me nervous is the lower high that we just experienced on ETH, and ETH is the bellwether for the alt market. I think when ETH does well, the alt market does well, and right now it looks like ETH is struggling a bit. That
you could have made that argument, and I'm not saying you're wrong, but let's just debate it for a second. You could, in May, ETH was wrapped around 2,600. It peaked out at 2,800. Then it puked on nothing down to 2,100. And then it forged a lower high at 2,400. you could have made that exact same argument then, right before it gassed up to $5,000 a token. I'm not saying you're wrong. I'm just saying like the most recent analogy for a lower high in ETH was immediately preceded a face ripping rally. Now, you're right about one thing, which is like the market is becoming more uncomfortable. And in my opinion, that's because there's a tremendous wealth transfer going on from basically everybody to DATs. And
just to clarify, the last time I see a lower high happening on ETH, in the market, in market structure was June 16th, which then preceded a 20% drop. And then, yes, it doubled. There's still a 20% drop that occurred before then.
Yeah.
And if you're a trader, you want to try to avoid being an alt for that 20% drop because they're going to be going down 50%.
Yeah.
I do think in general, like as an active participant in the market, it's like, okay, well, let me diversify some of my crypto into the other stuff that's doing well right now. Like I bought, like I said, previous podcasts, my portfolio is gold, uranium. I actually, just on Friday, I added more Robinhood stock and I bought Tesla for the first time. I got super lucky this morning with Tesla up 4%. That was cool. But the reason that I did that is because I diversified a little bit out of crypto, and then I think I'm going to do more this morning, just because I think that we're going to enter into a slower period, and I do think that these other these other assets, it's like the world has converged. We are no longer beholden to just only invest in crypto. We are able to invest across the board and get similar size returns, actually, which is kind of insane. Like if you look at Ethereum, people really gassed up about ETH from the lows. That right now it's about a 3x off the lows, right?
Yep.
Yeah, it's about a 3x off the lows. Robinhood did the same thing. Robinhood went actually more. Robinhood had a 4x off the lows from the tariffs.
Yeah, these are altcoin like returns that you're looking for.
You're looking, you're literally, it's like altcoin like returns from assets that actually have real revenues, and so that to me is compelling enough. That's why I started dabbling elsewhere. Also why, by the way, I've shifted some of my capital, but I think right now the way that I view the market is it's going to be slow. So I think you can take a little bit of a break here.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming-chartered special purpose depository institution. And deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Kicking off for its season 2 in September, Peaq's Get Real is Web3's first campaign rewarding people with tokens for creating real-world value. With a total prize pool of 5% of Peaq tokens' initial supply, Get Real follows a simple formula. Connect your devices, create value, score points. The quests can include such things as driving around with a Web3 navigator app, measuring local noise pollution, or running an AI agent in your browser. Further down the road, you can get a unique, customizable NFT designed by the agency behind the recent Call of Duty rebranding. An NFT that will evolve as you make real-world impact. Follow Peaq on X to find out more. As always, investments in blockchain technology involve risk, terms, and conditions apply.
I mean, I like that we're kind of pivoting the podcast to talk about a broader spectrum of things, because there is, as crypto and TradFi converge, which was the dream for us all along, the risk rewards start to become comparable in both spaces. But I guess to my earlier point, like there is a wealth transfer going on in crypto, which is how all transitional periods work, right? There's usually a wealth transfer going on. So the wealth transfer is going kind of from OGs, VCs, people who are in at low prices, to DATs. And the real question is for crypto, and we'll get to non-crypto in a second, who are the DATs? Are they steady hands or are they paper hands? Will they hold these assets or will they be forced to puke them out? And in the short run, I don't see the DATs puking assets. So this wealth transfer, while it results in sideways price action, which is unencouraging in the short term, is actually basically a scenario where tokens are getting locked up, right? That like tokens are going from the hands of people who want to sell to the hands of people who just want to hold these DATs. They're treasuries. A treasury is not an active vehicle. A treasury is a vault. So after I see two scenarios. One is that the DATs blow up and we're in for very bad times in crypto if they're forced sellers, because that's where all the marginal buying is coming from. So if they flip to selling, which has scared me at one point in the past, I'm not scared right now. It's going to get really fucking ugly. Then if not, it may just be enough of a sugar high to carry us through to the medium to long term, where you have just that gradual, steady drumbeat of buying for reasons discussed earlier. So that's that wealth transfer going on. I agree it results in a dearth of short-term opportunity while the wealth transfer is occurring and the price action is sideways. And it feels risky because lack of momentum is, you need momentum in this asset class. It's big. But then equally, there's another wealth transfer going on at the more like mega macro scale, which is from boomers and to Gen Z and millennials. That's going to be the biggest wealth transfer in the history of humanity, as that inheritance, the tens of trillions of dollars worth of it, gets passed down. And that's from a no coiner generation to a crypto pilled generation. So I think that those will be steady, very long-term inflows as well. And just in the stock market, I need to get more active in the stock market. I trade crypto adjacent stocks rarely, sometimes. I've dabbled in things that we discuss on this podcast. I've certainly dabbled in like GBTC and ETH. Those are two of the best trades ever. But uranium, I guess not a stock. Sorry. I would say like Tesla, I'm not there yet. I feel like that space is too competitive. I don't like going head to head with Rentech on short-term trades. I can't quantify or qualify my edge. What is your edge in trading those stocks? If you could help me understand it better.
I think my edge is just thinking a little bit more long-term about the narratives that could emerge and trying to place bets that allow me to hold these things for a longer period of time. So for example, like my time horizons on these trades are anywhere from 3 to 12 months. And so like my entire portfolio right now is just NASDAQ, S&P, which I don't need to explain to you. That's just index. Hood, because I want to bet on the increase of gambling culture around the world. And I think Hood is doing an amazing job at capturing that. And I think it will continue to be the winner. I mean, revenues continue to grow. They're launching a social feed, which is going to bring people in for gambling. Huge. I own gold because I think that, and this is like a 5-year bet. I mean, gold and silver specifically they're no-brainers, man. The world is trending into a more fractured state. The dollar is down a huge amount against other currencies this year. People don't trust the US to be leaders anymore because the US doesn't want to be a leader anymore. It wants other people to take care of its own problems. And so the idea of a dollar dependent world is just not true anymore. And if you look, there's a chart today published that the amount of gold warehoused in Shanghai has literally 7x'd in the last year. That's going to continue, and it's going to continue across the world. And you're basically like you're front running the biggest DAT in the world, which is the central banks accumulating gold, and that's going to bleed over to silver. Uranium, I've talked about this thesis before a while ago, but uranium, I'm super bullish on. Specifically, one, dude, just look at the chart. But from a geopolitical perspective, resources are getting more highly sought after because in a world where free trade breaks down, you don't want to have too many dependencies on countries that could turn against you. And that's what a lot of leaders are thinking longer term right now. They're thinking, okay, well, we can't rely on Russian oil, or we can't rely on oil from Kazakhstan. We can't, we need to be energy, we need to be energy independent, and nuclear power is the best way to do that. And it's been held back for a long time because specifically politics. And you're seeing that change. You're seeing Canada change its tune. You're seeing Germany change its tune. You're seeing all these countries that used to be against nuclear energy changing the tune, thinking, okay, maybe we should actually invest in this because it's the only way to be energy independent for countries. And especially this is true, especially for countries that don't necessarily have direct access to other resources. Basically, you just buy and stockpile as much uranium as you possibly can right now because it'll last you forever. And you want to start generating electricity within your own borders. Very simple stuff. I think renewable energies are going through the roof because of this.
Yeah, I think so too.
Mainly on the uranium part, I think it's the changing in politics.
Which ETF are you long? URA?
URA.
Okay.
And then I'm long Tesla because I think that there are no other public companies on the market where you can get access to the robotics revolution, and people are gonna crowd Tesla again because it's the robotics play, right? Like it's gonna be the leader in terms of the robotics in future. So every other robotics company is private. Tesla is not. Buy Tesla.
Yeah, no, that makes sense. I mean, Tesla, I agree with as a vibes play. Humanoid robotics, it's going to be the biggest product ever, and Tesla is kind of the only pure play expression of it. So it makes sense to buy the dip you get in Tesla stock when Elon flames out in politics, and buy it on the humanoid robotics trade. Like, what else are you going to buy? You're going to go on Forge or whatever second market and try to buy some like figure stock or some weird Chinese humanoid robotics company? Like, no, Tesla's the only pure play. So, and they already have a good business with the cars. So yeah, totally agree with that. To your point about your edge in equities, if you're trading short term, I think we agree there's no edge. If you're holding for the longer term, which is what you said your edge is, you do have an edge over institutions because you can weather bigger drawdowns. You don't have a risk manager tapping you on the shoulder and telling you have to sell or threatening to fire you or replace you if you underperform some benchmark that the manager or LP has in their head. So as a personal investor, and I would call this investing, not trading, you do have a mega advantage over the institutions, including for things like Tesla that are some of the most liquid, well-publicized, highly available, informationally available securities in the world. You can just say, like kind of on vibes, I believe in humanoid robotics. It's going to be bigger than the analysts think. And another edge that you have is that a Tesla research analyst working at Morgan Stanley, they're herd animals, right? If they put out some price target, even if they're like very strong buy, Tesla will go up 100% this year. Even if it's some crazy call that they're like betting their whole career on, it still could be way low because as an equity research analyst, that career is kind of a very risk averse career to follow. You're not taking any risk. You're making recommendations. And if you really stick your neck out there and you're wrong, you get fired. But if you're kind of in line with the pack, you get to keep your job, which is how the risk averse people who go into research jobs think anyway, right? Research is not for the doers, it's for the recommenders. So basically, there's kind of this natural arb for a trader to say, all right, I'm going to take a 12 to 36 month time horizon. I'm going to stomach heavy volatility that already puts you ahead of most institutions. And then if you want to get ahead of even more institutions, you can say, I think that the equity research analysts aren't bullish enough because they're not paid like that. They're not incentivized like that. So you do have an edge as an equity investor in that. As a trader, short term, I don't know. Now, the one thing I'll say about the Global X Uranium ETF, which is the URA ticker, it's very easy to get bullish commodities based on a thesis, just like you got bullish Tesla based on a thesis. But where I've been fucked in commodities trading with that kind of mentality is nothing you said about rising demand. We could be in a super cycle for uranium demand for reasons that you mentioned, but you didn't mention supply. And the one thing about commodities that equity and crypto investors always seem to forget is that if you want to be long one thing in this world, you want to be long human innovation, right? And human innovation has no stronger incentive than in the commodities supply space. When some commodity rips, right, the producers will invent a way, like I'm just going to give you the shale example, when oil started ripping during the Arab Spring, to drill down a mile and then sideways 16 miles to suck a paper thin layer of oil the size of Texas out of a Texas-sized paper thin field like a straw with an L shape in it. Like fucking crazy, crazy technological innovation. Never underestimate that. So who produces uranium, right? Canada, Kazakhstan, Australia, you get some in Africa. Price goes too high. These guys, these miners, they will just figure it out and make more.
Isn't that the argument for why you buy miners?
Miners, yes. The uranium ETF itself, the underlying commodity.
But I mean, URA specifically. I mean, I'm also doing this with copper, by the way. You always buy the miners, and that's specifically because of the supply issue, right? It's basically.
Oh shit, you're right. Sorry. Let me correct myself. It owns shares of uranium mining and nuclear sector companies, along with some exposure to uranium trust. Sorry, I thought it was just spot. I didn't realize that it owned miners as well. So
no,
yes.
It's mostly miners. It's in aggregate, mostly miners with some spot. And
so when you say I own uranium, you say like, I own uranium miners.
And that's exactly for the reasons that you discussed. Is I do think that these miners are going to end up making a lot more money over the next 5 years. But it's true. Like that's why you have to be careful. The only the only asset that I can think of where that's not really true right now, at least, is gold. It's like seemingly these companies can't overproduce gold.
Yeah, gold is you're not just gonna like find gold is it's such a mature market that you're not just going to be able to produce more of it. It's more been overexplored rather than underexplored.
Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
One other thing that I've been meaning to look into is the rare earth and minerals ETF.
I actually know I'm friends with a rare earths physical trader, and that is some of the craziest business ever. This dude goes to the Congo for business trips. Like he goes into all the weird places to talk to all the weird people.
It sounds really sick, actually.
It's cool, but it's I think what's hard about it is that like we like muggles, we hear about rare earths when they're hot, like, oh, there's supply chain problems, oh, China, oh, hoarding EVs. Like we hear about it when it's great, but when we're not talking about it or when it's not on our radar, it's like it's vomiting hard. And there aren't a lot of it goes through really crazy bust cycles, and there's not a lot of financial hedging that you can do if you're in the space while it's just spiraling into the abyss. So it's tougher business than it sounds like. It's just like it's one of those illiquidly traded physical things that will moon and then dump and then moon and then dump. And you know, you lose a lot of hair trading that thing.
Yeah, I can see that in the chart, but it looks like it might be in a moon phase right now
I think so. Because of
because
it,
of everything that we've just talked about.
yeah. You need a lot
We
of
got
rare
moved
earths
into
in humanoid robotics, a lot of magnets, a lot of actuators, a lot of electric motors.
So this is now the Rare Earth Robotics podcast.
Aerodrome, ENA, humanoid robotics, rare earth metals, uranium. What else did you guys tune in for?
Yeah, we covered it all today.
Do we cover the rarest mineral of them all, the 1000X token?
I think somebody tapped in because literally in the last 5 minutes, the uranium ETF that we just discussed here went up 2%.
Avi Fellman crushing it on air as usual.
Unbelievable stuff. Anyway, Jonah, this has been a pleasure.
It's been a pleasure, Avi. Before we wrap it, should we talk about the fact that we're about to ship a paid terminal, or should we just leave that for Twitter to discuss?
Guys, if you haven't been paying attention, Jonah and I have been working on I've been working on a terminal, and the terminal is pretty, in my opinion, pretty good now, to the point where we feel comfortable actually charging for it. So we're going to be launching a paid subscription for this. It'll be $20 a month, price the same as ChatGPT, and hopefully you guys will actually make a lot more by using the terminal than you pay if you pay $240 a month for this thing over the course of a year, and it helps you make one trade that you put 10 grand into, and you make 2% on 2.4%. Then you paid back. Then you paid it back. So hopefully that's worth it to you.
Sounds like a good deal to me. That's why we built it. Invested all this time and money in it.
If you can't put more than $1,000 into a trade, I wouldn't suggest buying this terminal. It's probably too expensive for you. But if you also can't if you literally have a portfolio that's less than $2,000, send me a DM on Twitter. I'll see if I can help you out.
Everybody drain Avi. Go for it.
Anyway, this has been a pleasure, Jonah.
Pleasure as always, Avi. Great talking to you. Till next week. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.